Good morning, good afternoon, everyone. My name is Russ, and today is the second episode of our educational series. If you remember, on the previous session, we spoke about auction market theory and the fundamentals behind why prices do actually move. And today, I promise you, please stick with me for less than 10 minutes, and I'm gonna give you two setups that would help us to optimize our trading based on that theoretical understanding. So in today's video, I'm gonna give you the setup number one, which is around naked point of control or naked POC, and the setup number two, which is helping us to accept into the previous day value area. Let's start with number one, point of control. What is the point of control and how to bring it to the chart? Let's take Bitcoin chart for simplicity, and this is a free indicator that all of you can add. It's SVP or PVP. I would explain the difference. PVP is a periodic volume profile, meaning you can use any period you want. It is slightly more flexible because you can decide to show you the point of control for the week, for the months. But if you're just starting, I'm recommending you using SVP, which is much more simple, and it shows your session volume profile, which is already set up on the day level. So if we are adding SVP, which is absolutely free, and here we need to make sure that POC is extended. Point of control is a special price that is closest to the center of the value area. And point of control functions as a magic magnet for the prices. Basically, as you remember, markets do not like inefficiency. And when this inefficiency happens, if you remember, market tried to seek for efficiency again. So it revisits those points of control. So you remember that we have added SVP, and here in the style, you can also manually select value area high and value area low. For those who for certain reason missed my previous video, even though I would really recommend to watch it, it's less than 10 minutes about auction market theory. Just to remind for those who missed it, what is the value area? Value area is those 1 sigma deviation that covers 68% of the fair value distribution about our median price, or in this case, we can say point of control. This red line, which you can see here. I remind you once again that we want our point of control to be extended to the right. And point of control, as you remember, I mentioned multiple times before, nothing goes in a straight line. So let's take an analogy of a traveler, of a pilgrim who works from place to place, hundreds of kilometers. He wants to go from point A to point B, but he knows that those points of controls are the sources where he can cover up on water in order to continue his move forward. So he would not just run there, because 100 kilometers might be too much for one go. He might need to spend several days to cover. And this is the reason why he would come back and revisit those naked points of control, consider them as the magic places where the water is located. So when we are looking right now at Bitcoin chart, we can see that we've been creating multiple points of control on this significant overextended move down. And what we've done afterwards, next day, we tapped into there, recovered. Next day, we tapped into there, recovered. Same here, this point of control of the 7th of August, recovered. And we created this naked point of control that lasted all the way into 15th of August. And obviously, then price came back to it as the same way as the traveler or pilgrim would come up to tap his water supplies. Does it mean that from there onwards price necessarily has to go up? No. But looking at the Bitcoin chart, I don't see so many point of controls on the way down. Where are our nearest points of control from here? Let's zoom out and have more looks. I see a lot of points of control towards our upper extension, I see more points of control into the area of naked 61,000, 64.7 thousand, 66.4 thousand, and 69.5 thousand. I can highlight those points of control, and I can even create a template where I am marking them as a horizontal line. I'm clicking here Option H or Alt H, and then I can just click on the right, click on here on the settings, and I already have a template that I call, for example, daily point of control. You can save as many templates as you want, and I can just highlight it as a daily. So it would bring here a letter D. I can do that for the daily, I can do that for the weekly, I can do that for the monthly. From my experience, more than 90% of time, those points of control will be tapped, and this is already giving you an amazing advantage comparing to most of the traders who are operating lagging indicators such as moving averages, and they're thinking that simply because the moving averages are pointing up, we need to go up. But they, or vice versa, the moving averages are pointing here down, so we're gonna go down. But they do not take into account that market is an efficient mechanism. It's pretty much an efficient auction where it wants to come back to those zones of inefficiency in order to renegotiate if that price was fair or not. Shall we hang out here for longer, or shall we reject and come down? Now you understand what I mean. Now I went from 30-minute time frame all the way to 4-hour, and indeed I see that we still have some naked points of control, but significantly lower, below 50,000. So I can also ask myself, would it be easier for the market to tap into those two areas, bringing us roughly 9% move, or would it be easier for the market to dump all the way to the previous point of control for 21% drop? I think that is harder. So what do you think? In that case, my bias can already be slightly bullish. Of course, I need to take into account other indicators. I need to take into account what other charts are doing, what's the macro environment, what the currencies are doing, euro to dollar, a dollar strength index, volatility index, stock market, and even oil. However, if just I look plain in the simple manner on the chart, I see that there is more inefficiencies to be addressed on the upper way than in the lower way, and that gives me this bias. Now, we spoke of the market profile. I recommend you to add one more confluence to your trading, which is the volume profile. You can also find this indicator very easily. It's called volume profile. It's free, and you can see that on the right. I use it for the entire session instead of analyzing it on day-by-day basis, simply not to confuse you. But if you're curious and you want to know, there is a certain difference between those two. Market profile is based on time price opportunities, those 30-minute interval blocks that we've been just observing when we studied auction market theory. Volume profile is much more simpler, and it places the main emphasis on volume, aiming to dissect the distribution of trading activity at different price over different time frames. What is the problem here? Well, the problem here is that volume profile is slightly less accurate, despite more simple, and very often just one huge institutional bid or institutional ask can slightly dissect the entire picture, and that's the reason why I'm not using volume profile on the intraday level, but I'm using volume profile for the entirety of prices that I see on my screen. And what does it tell me in this case? It tells me that there are different types of nodes on the chart. I have high volume nodes and I have low volume nodes. And what do you think, guys? Pause this video for a second and answer yourself a question. Where it's easier for the price to skim through, where it's easier for the price to slice through? Think. And yes, the answer is obviously through the low volume nodes. Low volume nodes showing that there is not so much of trading which has been done here. So normally we would gravitate naturally between those higher volume nodes. And if you remember from my explanation just a minute ago, we've been seeing the points of control all the way here. And it also aligns with the fact that there is a huge low volume node here. So I can expect the Bitcoin move of 2% as something much more probable than a huge downwards move to the area where we found our previous points of control at 47,000 and onwards. It does not absolutely mean that Bitcoin goes to $100,000 from here, but it means that there is much of an efficiency on the way towards 64,000, and it's much more likely, also taking into account the volume profile, that we're gonna go there first. And then I would reevaluate. If I'm gonna go on 4 hourly here, my bias is getting confirmed even further. I see this high volume node, and if you're able to accept above the 61,000 high volume node, then all the way into the 64, where we initially marked our points of control, we have this huge gap with a very low volume. And that actually, guys, giving me a very nice move of 7% roughly. For educational purposes, I'm not focusing so much on numbers. It's important for me that you understand the idea of what you're doing. So this combination of market and volume is giving us a very practical way to applying the auction market theory in place. So in today's video, we covered virgin or naked point of control, which is the same, how we use the market profile, how we identify those naked points of control, and why market wants to resolve those inefficiencies and tap those naked points of control, either they're on the way up or down, and how to use the volume profile as a confluence, high volume nodes and low volume nodes, to identify, is there correlation? Is there an overlap? Do we really think that price would go this way? And in the next video, as I promised to you today, we're gonna speak of another way to trade, which is based purely on market profiling. Stay tuned, guys, and much love. Bye.